Hey guys, Boris Lasser from VK Forex. Welcome to our weekly Forex technicals for 4-1 to 4-5. With markets pretty much closed for Easter Friday, we're going to start the weekly a little bit early this week. As always, past performance is not indicative of future results. Trading Forex carries a high level of risk, may not be suitable for all investors. A high degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as a substitute for extensive independent research, which should be performed before making investment decisions. BKForex LLC and Com are merely providing this information for your general information. The information and opinions presented here do not take into account any particular individual investment objectives, financial situation, or other needs. All investors should obtain advice based upon their unique situation before making investment decisions. They should tailor trade size and leverage according to their own risk appetite. We're not responsible for any losses incurred on investments made by readers and clients as a result of this information. If we do not render investment, legal, tax, or other accounting advice, and if such advice is needed, please seek competent advice of a competent professional. Well, clearly the story has not changed much as far as price action over the last 24 hours. We are definitely treading water today, and I think it looks like we're going to be treading water pretty much for most of the day. The critical levels in the euro remain right now to the downside, the 27.50. That's an absolute must here to hold. The interesting thing, and I think kind of an impressive thing if you're a bull, is the fact that there was a lot of negative news yesterday at the euro. It got all thrown at it, and yet we still held the 27.50s. Although the flip side of that is that we still just can't get any juice up. The 28.50 pretty much caps any of the price action for the time being, and that seems natural because this was a short covering rally. It doesn't seem like it's really going to be reflective of a larger move, but and this is the critical thing. A clear of the 28.50 definitely creates a more positive structure. It basically puts a base on the euro for the time being, and it does open up the possibility of a retrace all the way out to 29.50, possibly even 130. So the bias, once we clear 28.50, definitely turns bullish. A bias once we break through 27.50 definitely turns bearish. In the meantime, it's just treading water as we wait out the holidays. And the holidays, by the way, not only today for most of the Anglo-Saxon world, but also in Europe and part of Australia, Asia, definitely going to be on Monday. And that's means that I think I remember even from last year, the front of April when you have Easter holidays tends to be a very, very slow, very jerky time. Not a great time to trade unless you see major levels being broken in thin liquidity. Perhaps then you want to take advantage of it. But otherwise, it is not a time to just have a hunch bet a bunch just simply because the volatility here tends to really die out very quickly. Anyways, 28.50 to the upside, 27.50 to the downside. We're range bound in between. Not much action there. A move around 28.75 does open up the probability of 2900 and 29.50 to the upside and does create a near-term bottom. A break back down 27.50 really opens up a much steeper run towards the 26.50. Overall, if you look at the euro from a longer-term perspective, it is clearly in a downtrend, and a lot of these, it's just a massive downtrend. And every one of these rallies has basically been a simply sell the rally type of news. What is interesting here, though, and this is a key thing, is if we build a couple of days of not breaking the 27.50s, then you could make a very valid argument that we've built a near-term base. And regardless of how you feel about things fundamentally, you have to respect the fact that this base is probably going to turn the bias bullish for the near term on a short covering basis. If the base is broken, then I think you clearly have this operative number here around the 2600s that is going to control, or is going to magnetize basically price towards that level. So that's the euro. Marking time for now, but certainly looking at key levels for us to examine. Yen, same kind of thing. The thing about the yen that's really interesting is, and this is very notable. Remember, we've had huge volatility expansion, right? And generally, volatility tends to be mean reverting. So, if you have large expansion, you're going to have large compression afterwards. And that's exactly what we're having right now. If you look at this on a daily basis, you basically have no movement. You got 50 pips of movement, 100 pips of movement for the last week and a half. We have complete and total volatility compression, and that's from a fundamental point of view, it's because everybody's waiting for the BOJ to meet and give us some directionality, and I think that could be an interesting move here. But with expectations, I think, so highly geared towards a more accommodative policy, if there's disappointment, given the fact that yen has kind of petered out at 96s, has had every rally has been very stiffly met with selling, even though the argument has been this is all due to fiscal year repatriation. End of March, you're going to see these flows return, blah, 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 so on and so forth. You have to respect the fact that the dollar yen has not been able to rally over the last week. And any kind of a disappointment, the key level here is 93.50. A break of 93.50 opens up a move all the way down to perhaps even as low as 91 as we completely unwind a big part of this rally. So just as in the euro, the contrary move, which is to the upside, you have to respect the fact that price action is kind of bunching up to perhaps move to the upside. In the yen, you have to respect the fact that the price action may be bunching up for a move to the downside, and watch the downside levels very carefully here at 93.50. Cable going nowhere slowly, not even fast, going nowhere slowly, just doing nothing. I mean, cable, as we've noted, definitely made a very nice bull bottom here, right here, at 48.50, and has since just been sort of consolidating its retrace move. However, it is reaching this very critical level of 53, and again, a failure here around the 53 level kind of makes us turns us back all the way down to 51, perhaps even a retest of a double bottom here at 49. A break through the 53 level, and this is a really big important break. It does open up the possibility for a move all the way up to 155. So cable right now, not even a mild trade, simply because there's just nothing to do here. Now it could fail. The other possibility is to look at cable here as just simply not ever reaching the 52, 53 level, and just simply failing here. Now, a failure here and open of a downside would be a break of the 50-50 level right here. Sort of. So if we come back, we fail here, we start breaking the 50-50 level, that would really push the probability towards the 49.50 and a possibly retest of 48.50. Until then, it's just very hard to make any kind of a legitimate case for up or down. It's consolidating. It needs to give you a clue which way it breaks out. Above 5,300, we do have a reasonable chance to make 55. Below 50.50, we're going back to a double to a test of a double bottom here around 48.50. For now, absolutely nothing going on. Aussie has performed okay. Some of my fellow analysts have made a point that perhaps Aussie has topped out. It's not quite clear that it's topped out. The true signal of whether Aussie tops out is if we break the 103.50. Until the 103.50 stays in place and is operational as a near-term bottom, you have to respect the uptrend. But a move here to the uptrend will only be legitimate if you take out the 105s. So if you fail to take out the 105s, that means 105.10, 105.15 puts us in target for 105.50, which is the 105.50, 106 is the truly overhead area that's going to have a much harder time to clear. But this is right now simply a retrace, a pause that refreshes, and still an uptrend. 103.50 does not hold, and we start give the 103.50. That is a clear top, and then we could distribute all the way out to 102.50, perhaps even 101.50. So Aussie at this point to me looks like a buy at 105.15. And perhaps a sell at 103.50 on a belief that the top really is in place. You could front run this. You could basically make the assumption that yes, the top is now, and use the 105.15 as a stop against that, and that would be a relatively decent speculative trade. And some of my other colleagues have suggested that could be the case. But in any case, that's the scenario for Aussie and how it shapes up. One last thing I kind of want to look at, it's North America. It's a relatively quiet day, obviously, today. But the other North American currency that is worth watching, I think, simply because it's starting to really strengthen quite nicely, is the dollar CAD. The loonie topped out. Dollar CAD topped out around 103, 103.50. We've been talking about the fact that this was a clear topping area, and once it started to turn, the trend turned. What's really important here is that it's holding this 101.50 level. And this 101.50 is a very critical support, because I think in many ways a break here gives it a much more bullish tone to the loonie, and it really opens up the possibility of us maybe revisiting even parity over the next several weeks. Data has definitely turned positive. Sentiment towards Canada has turned positive. North America generally is doing very well. That puts a very nice cast towards the dollar CAD. If we can break below this 101.50, A move I would say towards the 101.30s opens up the possibility to 101.100 and then ultimately 101.50 and longer term parity. So what does this mean actually? I think in the currency crosses, it's this. If you look at the Aussie CAD, we had this big breakout, right, on a daily basis. Let me just go back 3 years just to see how big a breakout this was. This was the big breakout above this 106.50 level. But here's the interesting thing: this breakout is kind of failing. And for those who like to trade support resistance, this may be, I think, an interesting. If you assume this is the reference point for a stop here, somewhere around here, this may be an interesting trade to the downside, as you're going to get relative strength of the loonie against the Aussie going forward. And that could be an interesting off the path look for some trade ideas as we go into next week. Anyways, guys, wishing you guys the best of luck, the best of trading. Have a nice holiday, everybody, from Easter to Passover to everything else. And we will see you guys next week when the markets resume their full force. This is Boris Schlossberg, over and out.